Hello everybody, it's Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at our DPs or decision points and why it's important to respect the larger degree position of the chart. In other words, it's always important to trade with two time frames where you look to trade in the direction of the larger degree trend. But before we look at any charts, we have to look at our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and trading purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will occur. And we'll look at a loss in today's video as well. Right, let's have a look at a chart of the ES for yesterday. In particular, if I scroll back, by the way, this is our add-ons for NinjaTrader 8. We also have a standalone version and we have add-ons for TradingView, but today's video I'll be looking at our add-ons for MTPredictor add-ons for NinjaTrader 8. So I'd like to look at yesterday, in particular this TS3 W3 trade sell setup here. We'll also have a quick look at this PB or pullback trade setup here. We do have a trend indicator at the bottom here, our MTP trend, which is red for down, black for in the process of making a reversal, and blue for up. But we don't tend to use this first and foremost. This is just like something just to help us once we've looked at our DPs on the higher time frame. So what do I mean by a higher time frame? Well, if you're on a 3-minute chart, you look to go to the 15-minute chart. In other words, we're looking for a time frame between 3 and 5 time frames higher. If you're say looking at a 15-minute forex, you'd probably go out to the daily. Sorry, the hourly. If you're looking at a daily, that's what I was thinking of there. You'd go out to the weekly. So you're looking for a time frame between 3 and 5 time frames higher. Now, the important things about our DPs is that they're on the chart in advance. They're leading indicators. This is why it's so important that you have to be prepared in advance for potential areas of future support and resistance. We're not projecting markets are going to get there. What we're doing is using them that if the market gets there, we can then use that to define the large degree trend. So like yesterday, if I scroll back to around about here somewhere, so before the market got up to those highs, can you see how the market was chopping sideways here? In this case, we'd use the last extreme high. So in other words, we'd go back to this last pivot high. Do you see that? That's the highest high all the way along there. So we'd right mouse click, we'd do decision point. Can you see how it gives you an area of resistance in this case and how it's on the chart in advance? So as the market starts to go up, can you see that? The market started to rally up. It got to that level there, then it actually made a reversal at that level. So we're not projecting it's going to get there, but what we're saying is we look to see what the market does if it gets there. So as it got to that level, it respected it and made a reversal and started to come down. As it started to come down, we do the exact opposite on the way down. This is the last swing into that high, can you see? So we take this last pivot low, we'd right mouse click, DP. Again, can you see how it gives you an area in advance? In this case, it would be support. But the most important thing, again, it's on the chart in advance there, so it gives you an areas to anticipate in advance potential support and future support and resistance areas. As the market came down, if we see what it did yesterday, I'll just put the scale back on. Can you see how yesterday the market reversed at that high? It then came down, and look where it made the low. It reversed at that low there. So in other words, the market did actually make reversals at our level. So how can we use this? Well, if we now go to the shorter time frame chart and we scroll back, here we go. This is during the day. Here's our 15-minute or higher time frame resistance. You can see the market did indeed turn at this level and start to go down. In other words, the market did what we anticipate. Our MTP trend red, again, that gave us confidence the large degree trend was down. Because the large degree trend was down, we're looking to take trades in that larger degree trend direction. In other words, we're looking to take short trades. We had a PB sell here, or pullback sell. Remember, we used the correctly coloured reversal bar, so this would be a red sell bar within 5 bars of the reversal. Ideally, this should have been on the bar of the pivot, or ideally 1 bar later. So this is actually a bit of a messy setup. So, you may not have even considered this one because it was a bit messy. But for the sake of the video, let's take it. So we hover over the red sell bar. We place our analysis on. That would have given us a potential trade. Notice how we use position sizing, in this case less than 2% of a sample $20,000 account. So that would have taken you into a short trade here. The beauty of position sizing, taking you into a short trade here. The beauty of position sizing is if you're wrong, your loss is kept small in relation to the profits, and this is how I'll look at this a bit later in the video and why it's so important, and I think why so many traders fail in this business, because they don't keep their losses small and they don't have large profits. That's the fundamental requirement for a successful trading plan: small losses, big profits. So if you're wrong, it would have been what we call 1R, or one risk unit loss. If you're right, in this case the profit target would have been here at just under 4R, so 3.9R, or 3.9 times the initial risk. In this case the market didn't go as anticipated, maybe because you'd passed the 100% initial risk level. You might have brought your stop to break even, but let's just say for the video that this would actually been a losing trade. So this is important to understand to start with, that markets don't always do what you anticipate. There will be times when the markets go the wrong direction, there will be times when you have losses, but the important thing is when that happens, the losses are kept small at what we call one risk unit. In other words, small in relation to what your profits are. So there's the first trade that didn't work out as anticipated, but we come back up here, we then have another signal. You see there was a history triangle here. Not all history triangles are losing trades. In this case, this was actually a double top, so this setup at the time, you'd have actually come in. If I right mouse click, do the analysis, you'd have come in short just at that low of the bar there, but you wouldn't have been stopped out. So in this case, even though it was a history triangle, this would have been a profitable trade. So that's important to understand. But this is the beauty of MTPredictor, is, do you remember the previous trade? If we said that had been a minus 1R loss, look where the profit target is for this one, at plus 11R. In other words, this trade, if it had got down to the anticipated profit target, the profit would have been very big in relation to the loss. In other words, 11 times greater than the previous losing trade. This is what we're looking for: large profits and small losses. So this trade started off well. You'd have been short here. You wouldn't have been stopped out. The market started to climb down really nicely, and as it got down to here, remember our profit would have been, or profit target would have been approximately 11R, or 11 times the initial risk. The market was getting down to here at what, 10.5 times the initial risk, so almost at the profit target. But the most important thing is, do you see how it was bumping into the higher time frame support? So this is what the reason for the video is why you must respect the higher time frame support and resistance zones. Because in an example like this, where you are actually in a trade, you're in a profitable trade, you're in a very good profitable trade, sitting on about 10R profit, you're only a whisker away from your anticipated initial anticipated profit target, but it's slightly beyond a higher time frame support zone. You know that this higher time frame support zone may well actually reverse the market. You never know for sure. Everything in trading is all about probabilities. But what you want to try and do in this case, because you know you are in an area of where a support is likely, it not 100%, but where it's likely, what I'd suggest you do is perhaps start trailing your stop just above the 1 bar high. So in this case, it would have come back up here and stopped you out at this level for just under 9 times the initial risk. If you're using our MTP trade module, which is in our pro version of our add-ons, that would have been really easy to do, because you have these buttons here that allow you to well, first and foremost, allows you to actually enter a trade really quickly. Once you place the analysis on, you just click on trade, then do OK, and it puts it in the levels and the profit targets with the correct position sizing. This is the important thing. In this case, you've been going short 2 contracts to keep your initial risk under the 2% of a sample $20,000 account. It places your orders with the correct position sizing. But as it counts down to this level, you can then click this button here, which says bar, which in other words, it would change your trade management to being 1 tick beyond the previous bar high and low. In other words, it would trail at the previous bar high or low. You can also close your position. You can then move it to break even. In other words, when you get to a certain level, you can bring your stop to break even. You can choose to using your ATR stop, which is our red and blue dots, to trail the market as well. So it gives you quick tools to be able to help to not only enter your position correctly with the correct position sizing, but also to manage your trade once you're in a profitable position. So that's really handy in our pro version of our add-ons for NinjaTrader. Just turn that off. So the result of this would have been a very good trade. But the most important thing is, can you see how this profit would have been large in relation to the previous loss if that had been a losing trade? Here the profit would have been almost 9 times or 8.8 times the initial risk. So this is what we're trying to do with MTPredictor. We're not trying to have a high profitable system. Over my last sort of 35 years in the markets, I've found that it's very difficult to have any kind of trading system that has a high profitability of winners. If they do, it normally means the winners are small. For any winners to grow, they have to be in the market a long time to allow any trend to unfold. So that means that probably you'll have a lower percentage of winning trades. But the important thing is not looking for a high percentage of winning trades, but looking for a system that allows you to keep the losses small and, more importantly, keep the profits large, but very large in relation to those losses. It's so much easier when trading is if you have just 1 or 2, 3 small losses, and then your next profit is 5, 6, 7, 8, 10 times those losses. It puts you back in profit so much easier. So that's the idea of MTPredictor: small losses, large profits. But you see here how it's important to not only first take your trades in the direction of the large degree trend. That's why we go out to the higher time frame chart, place our DPs on. If the market reverses at those levels, that then deems or defines the large degree trend. We then look to trade in the direction of that large degree trend. And then if you're in a trade like that and you do get a position like this where you are bumping off a higher time frame support or resistance zone very, very close to your original profit target, then look to respect that and perhaps bring your stop a little bit closer. What happens if the markets don't reverse at your DP levels? Well, you wait till they do, or you look for another market, another time frame. Remember, these DPs, like anything else in trading, are not 100% accurate. Nothing is. So we don't forecast the market is going to reverse at them or is going to get to them. What we do is we watch to see what the market does if it gets to them, and then see if the reversal does happen at those levels. If it does, we then use them to define the large degree trend to help us then trade on the shorter time frame chart. So hopefully this has been a good video to show not only how we use MTPredictor, but how we use a multi-time frame approach to look to trade in the direction of the large degree trend, with an example on the 3-minute and 15-minute ES from yesterday. If we move forward a bit later in the day, so let's just clear all this lot off. You can see we have some history triangles here where there were potential sell setups. You can place the analysis on these to show what the market would have actually given you at the time. But can you see how these would now be against what would have been defined as an uptrend? So here's our support zone coming in at our 15-minute DP support. The market reverses at this level, it starts to go up. Our MTP trend here changes blue to help confirm that. So can you see how these sell setups here were actually against the new uptrend as defined by this 15-minute DP. So even though there are potential sell setups here, you wouldn't have been considering these because the large degree trend would have been deemed as up. Remember, what we're looking to do is only trade when the picture's clear. It will only be clear about 50% or slightly less than half the time, and when it is clear, then you only look to trade in the large degree trend. If it's not clear, you look to wait or find another market, another time frame where the market prediction is clear. So that's the last bit of advice. Only trade when the picture is clear, and then look to trade in the direction of the large degree trend, which yesterday would have been down off this DP here, this high time frame DP here. So you'd have been looking for sell setups down into this support zone. After this support zone, the market reversed this support zone, the large degree trend would have been deemed to be up, and therefore you'd only be looking to take buy setups.